private money breakdown. So we're going to get into what the private money breakdown actually is. What it is why I love private money is it works a lot quicker. There's less paperwork, quicker closing periods, and if the deal is good, the money will come. So if you're going to have a down payment before, if you're going to buy a property that has a down payment of $10,000 and $100,000, so you're going to owe $90,000 at the end of it, but you know that the resale value is already $150,000, you're just looking for that $10,000 to buy the property, you can raise private money quick, almost no paperwork, against an asset that is performing, and then you can go ahead and close it. So hard money won't work in that situation because you're going to be in it for way too much money, and they need the $10,000 to move. Hard money isn't going to lend you $10,000 because they usually like to be between 75% of the deal of the money that they're loaning. So private money is so much better in that aspect. Now, another common question that you're going to get asked when you're raising private money is how are they protected? So these are the 3 to 4 ways that you're going to protect them. The mortgage deed, the deed of trust, lost payee on the insurance. So in case anything were to happen, they're a lost payee and they're going to get their money back. And then, of course, the promissory note. The most common one, especially like on smaller transactions, is going to be the promissory note. And that one, just go get it written up by an attorney. It's a 1 to 2 page document, nothing more than that. Mortgage deed, of course, that's when they're like bigger deals. Deed of trust, also when they're bigger deals. But if it's a $10,000, $15,000 transaction, the promissory note should take care of you for the most part when it comes to that amount of money being loaned. Now, all of the documents should be recorded and in place to protect the lender in case anything were to happen on the deal. I cannot stress that enough. Make sure that you keep your copies of all this stuff because you want to make sure that you're protected. You want to make sure that they're protected also. Some additional quote-unquote questions / objections that you're going to have to overcome. Is this someone I can trust? So I'm looking at you right now. Are you someone that they can trust? Will they be able to pay me back? Is this a good investment? Is this a secure investment? So a good investment is one thing, but it is secure investment. Is it backed by real estate or is it backed by a volatile crypto market, right? Does this make sense financially? Do they have $10,000 to give, or is that all the money that they have? If they only have $10,000 in their bank account and you're asking them for 10, ethically, I don't think you should do it, right? But if they have $100,000 and you're only asking for 10, I think that's a good deal. As long as it fits the category of that you will be able to pay them back, you are a trustworthy person, and that it's a secure investment. Now, do I trust what they say? Are they going to do it? I don't know you personally, but you definitely should be the person that they come in and say, you know what, they can trust me because I've done this before. They can trust me because I know the deals that I'm putting together are great. Here are my comparables. Here's my ARV. Here's everything we're doing right now. This is how I know that you're going to be protected, right? Become the person, which goes back to the very beginning, that has great confidence, great tonality, and great posture when raising private money, because no different than the seller, they are a lender. It's another piece of the puzzle, another big piece of the transaction that you need in order to put real estate deals together, especially creative finance deals, because if you don't have capital, the capital needs to come from somewhere. Now, this is where we go back to the previous one, right? Raising private money. How hard is their money currently working? What rate of return are they used to? Do they want cash on cash? Do they want cash flow? Can they be paid quarterly? Can they be paid monthly? Are they protected by real assets? What are their financial goals? Do they have pain points? And have they been in a bad deal before? Because a lot of times people will have been in a bad deal before, so you don't want to, if, for example, if they have a really bad taste in fix and flips, don't give them a fix and flip. If they say I lost 50 grand on a fix and flip, I wouldn't pitch a fix and flip. But if they say, you know, I'm down $100 a month cash flow on this deal, I thought it would make me more money, I lost $1,200. That's not a bad deal because you can make that money back, right? So make sure that if they have pain points, that they're not too deep pain points, that you're offering them another deal with the same pain point. Now the terms look different over here. So these are the quote unquote terms for raising money: lien position, payment, interest rate, points, length of loan, protection, and personal guarantees. Lien position is if they're joint venturing, then they're going to be second lien position with you. Payment, how are they going to be paid back? Is it going to be a joint venture payback? Is it going to be a monthly payback? Is it going to be a quarterly payback? At what interest rate are they going to be paid back? Points, and interest rates are two things. Points of, if I lend you $100,000, I want 3 points to close, then that means you have to give them $3,000. So 3 points of $100,000. That's a very common hard money term. Private money, you don't see it as much, but it is there regardless, right? So interest rates is, you're going to pay me 10% interest on the $100,000, but I want 3 points to close. So you're going to pay me 10% interest on that $100,000 plus $3,000 for me to lend you that money, right? So then the length of the loan, how long are they going to be on the quote unquote promissory note for? How long are they going to be in the joint venture for? How long are they going to lend the money to you directly for? All that stuff. How are they going to be protected? So that's going to be going back to the top here. The protections, mortgage deeds, deed of trust, lost payee, all that stuff. And then personal guarantees. Are you going to give them any kind of personal guarantee? If you're borrowing a large amount of money, are you going to put one of your assets up for collateral if anything were to happen? Some people like that. Some people don't like that. But just know that if you're raising large amounts of money, a lot of times it does have to come with a personal guarantee. And if you're comfortable with that, do it. If you're not, don't be raising money anyways, right? So those are just a couple different things that I think is very important when raising money. Find deals and then go raise money. But while you're finding the deals, talk to people, become an expert that people will say, hey, you know what? I already want to lend this person money. Let me just wait till they get the good deal and then I will lend the money. So if you can show your expertise before asking for money, that is so much better than just asking for money off the bat. So that's just a little tip I'll leave you with. That's not in the notes, but I know it's very, very beneficial because as someone that, has raised a lot of money, has put into a lot of properties, the more expertise you show, the easier it is to raise money. The better you are at what you do, the better it is in the form of raising money, right? So just become really good at this, get really good at structuring subject to, get really good at structuring creative finance, get really good at your down payment amounts, and get really, really good on your rate of returns. If you're getting close to infinite rates of returns, I promise you, people will just loan money to you because you're going to be able to guarantee them their money back just because you know exactly how to structure your deal properly. So that wraps up the course. I hope you guys really, really enjoyed it. If you have any questions, go back through this course, refer to it. It should be written in a way where if you have a deal, all you have to do is plug and play. Thank you so much for watching.